Okay, everything's perfect now. Hey Enzo, and hey Lenny. Guys who are new here, if you want to share your trades with us, just take screenshot of multiple time frames, preferable at least the 1 minute chart and the 5 minute chart. If you have this will be enough, and preferably at least with a few minutes before your entry, so that we can tell what we see there and analyze the price action. If you have any questions, you can ask along. And hello everyone on YouTube as well. So your first trade is for Bitang. Bitang traded TGT. That was today or yesterday. It's today. So the catalyst, no catalyst I guess, setup, parabolic reversal. You try to catch it for parabolic reversal. I see that. Indicators, the price was extended from the 9 moving average in the 5 minute chart. We'll get to that later when we zoom in. The entry was based on the 2 minute chart after the doji. Stop placement, dynamic hotkey where the stop loss was calculated would have placed the stop loss slightly below the body of the doji, intended to get 4 to 1, and you actually ended up getting 0R. I probably need to have a look at my dynamic hotkey. Stop loss is too tight. I should change it from 0.3 cents to 0.5. So look, if you are using the hotkeys, you can't just decide random hotkey. You can't have maybe 0.03 stop loss or 0.05, which is 5 cents on TGT, which has a spread of 2 cents and which is $153 priced stock, right? I guess you could have even got some slippage here. So yeah, 3 cents, 5 cents is so tight. You could use the CAS hotkeys for double clicking. You just double click on where you want your stop loss to be, and that will be your stop loss. But automatic 3 cents or 4 cents or 5 cents is so tight sometimes. Sometimes it's actually too much, like having 5 cents stop loss on AAL or maybe DAL is too much on a parabolic reversal. You might want to have it like 0.02, 0.03, right? On stocks like TGT, you might want it even up to 20 cents. So it depends on the stock you are actually trading. Now let's see it here. So let's look at the 5 minute chart. Since this is a parabolic reversal, we definitely want to take a look at the 5 minute chart first, right? Looking at the 5 minute chart, 1, 2 candles. This is not so extended, to be honest, but it's decent. The candles here are not so big. When I see candles with this size, I prefer to see a third candle just to make sure it's extended and take an entry based on the 1 minute chart somewhere down here. I will go for 2 candles if they are big, like this. This is a big candle. If we're having another candle which is at least medium sized, and then we're having the reversal candle, I would take it. But those candles, they're just so small. And remember, when we are taking parabolic reversals, the target is not always the 9 on the 5. It could be below it, at it, or maybe slightly above it. And we go for below it, right? Now look at this. These are 2 candles. You are getting your entry here. And as we said, it's not always literally the 9 on the 5 minute chart. It could just get a little bit closer to it. That reward with this entry on the 5 minute chart is not the best. Let's go to the 2 minute chart and the 1 minute chart. So on the 1 minute chart, it's dropping down there. You are having a reversal candle. Could have taken it to the long side here. And in this case, guys, what would be your stop loss? 1, 2, 3. What would you use, guys, for a stop? Chicago will use 2. Someone else? Would this be your stop loss? Or this or this? Hey, brown bag. Wait, actually the chat room is not being scrolled automatically. 2, 1, 1. Let me actually fix the chat room. Why isn't it being scrolled down? Now it will be always scrolled down. So yeah, 3rd is the best risk to reward. 2 is the safest because you will not get subbed out. Even on this pullback right here will not get you subbed out, and you will be able to survive a bigger move. So the low of the week is better usually if you want to hold for a bigger move. For me personally, I would have used 1 just to be a little bit safer. It's yes worse risk to reward, but in this case, at least to just give a little bit more room. If I can catch an entry somewhere right there. And yes, you can also use half of the week somewhere here. All of them are good stop losses. This is offering you the best risk to reward, but it's a little bit risky. On a stock like TGT, this is giving a little bit more room, and it's not the low of the week, or maybe you can use the low middle of the week. The low of the week is the safest in case you want to hold it for a bigger room. This would have been a good entry. Now what is it doing? It's making a double bottom with the second bottom higher than the first one. This is showing us that it tried to actually break down, but it failed to break down, right? An entry here earlier would have been decent, but in this case, what would be your stop loss, guys? Let's say this is 1, let's say this is 2, and let's say this is 3. 2 for, yeah, 2 for Noel. Exactly, I mean, I will be with you guys. 2 will be the best. We definitely can't use 3, and why is that? Because 3 means a stop loss within the candle, and knowing how the price action is being traded, it could go a little bit lower, not even make a new 1 minute low, and come back up. So this would have been the best entry in this case for a double bottom, second bottom higher than the first one, and this would be the best stop loss in this case, and then just go for 2 or 3 hours. The entry here was a little bit late, and along with that, stop loss was so tight. I wouldn't even use this as stop loss in this case. At least this should be a stop loss just to give it some room, because it could just go within the 1 minute candle, and even this is not the best stop loss. Like, this is the best stop loss even with a late entry. So the setup was good, just a slightly late entry and slightly tight stop loss. Now let's see the next trade we have there. Ivan. For now, guys, I'll review one trade for everyone. If we have time, I'll get back to them and I'll review a second trade just so that I can cover everyone there. Zoom, this was perfect. I love this. This was actually amazing. This is an ABCD pattern and we'll go to it. So a tightening information on the 1 minute chart. So you see that it's getting tighter and tighter and tighter in the price action. It formed a 5 minute doji. There it is, an indecision candle. 2 candles earlier. Yeah, 5 minute doji, 2 candles earlier. I see this is it. Had basically been respecting the 1 minute chart, the 9 AM and the 1 minute chart. Entered at the break above the 1 minute consolidation. Now guys, look at this. It could be a good parabolic reversal if we think about it, right? Why is that? Because it's 1, 2, 3, and after the third candle, a pullback is usually expected. But what would make this setup here bad for a parabolic reversal? One of the rules I mentioned. So this is definitely not a good parabolic reversal, and yet not a good long as well. It is extended, that's the 9 moving average, it's here, right? So it's somewhere at this moment on a third candle, it was around $4 further than the 9 moving average in the 5 minute chart. There is something else? Exactly, Lou. Yeah, it's view up. View up is so close to the price action. We don't want to get into a setup or a parabolic reversal when we have view up between our entry and our target, unless view up is our target. So parabolic reversal, this is not the best setup for parabolic reversal. Could it be good for an ABCD pattern or a trend continuation? It could be if we have the confirmation. What did it form on the 1 minute chart? On the 1 minute chart, it started forming a pennant right there. You see that it was trying to make lower highs, lower highs, lower highs, lower highs, trying to break down. At the same time, it was making higher lows, and higher lows. On the 5 minute chart, it's also sort of an obvious pennant right there. Then it's finally breaking up, and look at this. What happened at the breakout? We had an increasing volume at the breakout area, which is showing you that one, either shorts are getting stopped out, or two, longs are stepping in, or maybe both. So took it to the long side, and this was an amazing stop loss. You don't need more than that, right? You could have given it a little bit more room somewhere right there, but this here is also not bad. You're taking it to the long side, and then you just go for 2 or 3 hours depending on your risk to reward. I would have gone for 3 hours because looking at SQ, it's been so bullish today. I'm not sure if it's at all-time high. It's bullish in the daily chart. I would have definitely held it more because this is just the second leg up right there. So yeah, this was amazing. I like it. Good job and well done on managing it. let's see what Zach did there. So that Zach said, hey man, CNK really got me today. My first entries at and stops out from 9:58, 10:02 were very messy. I needed more patience. Would you have entered where I did at 10:05? Zach, I'll tell you more. I actually entered at where you entered at 10:05. I liked the above average volume and small body on previous candles. I did not enter on the shooting star candle, which is here at 10:10 because of the low volume, and I didn't like that failed to touch the clear 1237 level. Would you have entered on this candle? I would have if I was watching it. Okay, and let's see what else you have. I entered at 10:13 candle. Okay, so let's go through this trade, guys. If you have stop loss, yeah, exactly, that's it, Chicago. If my stop loss is 20 cents, I'll go for 60 above the entry to get twice what I wanted to get. Now look at this. Zach traded CNK and he traded it for a parabolic reversal. This is a really strong uptrend. We have view up down there. We have the 9 moving average above view up. So all the rules are there, right? This was a little bit of an early entry. Here I would have liked it more, but still would have been sold out, right? Why would I have liked this entry here? Anyone? This entry. Exactly, Laney. 4-bar play. What do we have? We're having green, red, green, red, stock going up, coming back down, taking it to the short side, stop loss right here, and then getting stopped out. So this is not bad. If you have just waited for the setup, eventually it still did it, and you got stopped out. Nothing bad about it. Would I have re-entered right here? No, the setup already failed. It started forming an ascending triangle on the 1 minute chart on the stock, which is strong. And new rule, if I see a stock which is consolidating for 6 minutes or more than 6 minutes, forming an ascending triangle, I'm not trading it unless it's breaking out. So the second entry, I would have definitely avoided it right here. Okay? Yeah, I'll get that, and I'll explain to the 4-bar play right now. Now, what's happening? Third candle, right? 1, 2, 3, 4. Actually, fourth candle. A reversal candle on the 1 minute chart. You're getting it to the short side on a really good entry and a really tight stop loss. And it's getting you stopped out, unfortunately. Still fine. This is a good setup. This is a good setup. You got stopped out twice. This I would have avoided, to be honest. Now, here, again, what's happening? It's 1, 2, 3, 4, 5. Fifth candle. Close to a daily level. Forming a reversal candle, making a new 1 minute low. I would have taken this thing to the short side with the stop loss half of the week. And this one would have given you the risk to reward you actually want to get. Would I have taken it here? Not really. Why is that? Anyone, guys? I know that you like that it finally started dropping with volume and it gave you that sort of a reversal candle. And then you're taking it on a new low with the stop loss. I bet it was somewhere here, which got you stopped out. But why wasn't this a good entry? And even if you take it, exactly, the risk to reward. The risk to reward was good for him. Why? Because he had a really tight stop loss. This was his stop loss, and that was his reward. But the stop loss wasn't really good. This is the stop loss. Why is that? Because stocks, they don't go straight down. They could make a pullback for make a double top with the second top lower than the first one, and then go down. If you have your stop loss here, technical, and you had your entry here, you will survive this pullback. If you have chased this stock and entered somewhere down here, and then it's doing that pullback, it will get you stopped out, and then it will go if it decides to go right there. Does that make sense? Now, let's go to the 4-bar play. What's the 4-bar play? It's just simple. It's 4 bars. 4 bars, which are trading in the same range, okay? And that's important, the same range. It's not always picture clear. Sometimes you could have bars a little bit above with wick, a little bit below, maybe a bar with a little bit wick above it, and then it's going down. But the key here is to have them in the same range or closer to the range, okay? Green, red, red. What do you see here? Buyers won 2 times, seller wants 2 times, and this is the bar which is determining to me who is going to win, the buyers or the sellers. Buyers are trying to push it up, and this is a must in this setup. I want to see the wick which is going first up. And then sellers are getting in control, pushing it back to the breakout area, which is my entry. It's way safer and better if you wait for the breakout area before your entry. Because if the breakout happens, most likely it was going to go down. It broke the support area. And the problem here is that if you wait for the breakout, a lot of times it will just dump a lot and you will get a bad fill. And that will be your stop loss. This is why I get in at the breakout area. And if you look right here, the entry would have been at the breakout area, but unfortunately it didn't break it. And if you wait for a breakout, usually it's better because you have more confirmation and the setup is more likely to work out. Pre-entering is not really good sometimes, but it's just giving you a good risk to reward. So it's safer to wait for a breakout if you are okay with missing some moves. If not, you could enter exactly at the breakout after the sellers are getting back in control. Now this setup, I like it on the 5-minute chart, sometimes above VWAP, when the stock is just consolidating above VWAP. I definitely will not take it to the long side here and put my stop loss somewhere down here. I want to see the next 5-minute candle, and then coming back up, take it to the long side, and then hold it for a strong trend. On parabolic reversals, I take it as confirmation when the stock is already extended from the 9 moving average in the 5-minute chart, if I don't have a reversal candle on as confirmation for me. Do you enter at the break of the 4th candle or the break of the range? I enter for the breakout. This is my entry for the breakout. The better though and the safer is to wait for the breakout to happen and enter at the breakout of the 4th candle or the breakout of the range. Exactly, the range, sorry, not the 4th candle. It's safer to enter at the breakout of the range. The wicks are counted in this case if they are all touching the same level to the penny. In this case, wicks are counted. If it's been only 1 week, let's say this is it here, this is 1 week, but then the rest of the stocks candles are holding the range, I will not wait for the break of the week. I will hold for the break of this range somewhere there. Okay, perfect. Stop loss, James, we mentioned it. Stop loss will be the high of this week. Wherever the buyers could get it to, and then they are pushing it back lower, that would be my stop loss. Now, one case thing though, if the buyers get it all the way to the high of the day, and then pushed it back down, I will not enter on the 5th candle. I will wait for the 6th candle. After the 6th candle, I just avoid the setup. Now let's see DH pack. What did you do there? You are welcome. Now let's see CNK. Look at these guys. We all tried the same things, but you look at this. This is the one who is actually waiting for the setup to be perfect and not giving up unless it's all there. I actually took this trade and I got stopped out, and I took this trade as well and I got stopped out. Then I stopped watching it and I missed this trade right here. But DH Pack was actually watching it. He took it here for a 4-bar play, got stopped out once, 1 hour loser. Got stopped out a second time. I'm not sure if it's a break even or 1 hour loser. Let's say it's 1 hour loser, okay? Then he's finally taking it to the short side here, having a stop loss somewhere up there, and look at the reward, right? Definitely at least made the 2 hours and slightly green right there. Good job there. Ralam, let's see what you did on S, R, and E. So Ralam traded S, R, and E for an ABCD pattern. Now look at this. This is where I would wait for a 4-bar play. Stock is holding above VWAP. Buyers won. Sellers won. Not a perfect candle, right? But we said it's not always going exactly to the high of the range. It could be a little bit not perfect, but still, well, let's consider that this is the 3rd bar and nobody won here. But since it's green, let's say it's a green candle. Now we wait for 4th candle and we want to see what's going to happen here. Are buyers going to win or sellers? If buyers are getting it back up, then on the 5th candle we could go for the breakout. If sellers are getting it back down, then who won here? Sellers. And what we like more here to the downside is that green, red. This is a green, but this is not really good one for the buyers. It's more for the sellers because of the wick up there. And then the 4th candle, it's being pushed back down for the breakout and it's just dropping down. This is like a play. Oh, this is actually the 1-minute chart. Yeah. You took it for the ABCD pattern to the long side but it wasn't perfect because of this engulfing right here. Engulfing and below a daily level or pre-market level, right? Yeah, it's pre-market level. So this is why I would have just avoided it. I would have waited for at least more confirmation or maybe more price action before I take this setup right here. It is an ABCD pattern if you look at it and you say that this is the A, this is the high, it's pulling back, not going to the A, this is the C, this is new high D. But it's not enough to have an ABCD pattern. We want candle confirmations and we want more confirmation in our favor. Another thing is this is an ABCD pattern if you look at it on the 1 minute chart, and I didn't pay attention here actually, guys. Look, what do we have on the 5 minute chart? We're having a stock which was strong. It did the bearish engulfing sandwich setup, which is a bullish setup, right? It did break up, fake breakout, closing as an indecision candle on the 5 minute chart and starting to make 1, 2, 3 and starting to drop down, lower lows and lower highs on the 5 minute chart. So we are taking an ABCD pattern on the 1 minute chart against lower lows and lower highs on the 5 minute chart. Like in this case, this play here to the short side would have been way better. Why is that? One, we're having a downtrend on the 5 minute chart. We had a fake breakout on the 5 minute chart. We had a stock bouncing off the pre-market high or level we have right there, and it's forming the 4-bar play, but to the downside, taking it for the breakout for a quick scalp down there. Do you use an Excel to calculate the amount of loss 2% and the limit price, exit price, or just use hotkeys in DAS? I use hotkeys to that in DAS. Lou, if you are saying about the parabolic reversals, I don't really care much about the 15-minute chart and what it's doing. I care more about the 5-minute chart and the 1-minute chart. When I'm trend trading, ABCD patterns especially, the 15-minute chart is really important for me. Like no ABCD patterns without 15-minute chart. At least to just determine the direction of the trend. Claire, I'll remind me before we are done here. I'll send you a link to the forums, Carl's hotkeys, and you will have those hotkeys there. You can just change some stuff in them. Actually, let me send you something. Most frequently used hotkeys. I'll send it here. Okay, you can see all the hotkeys I'm using. They are all there, and you can just adjust some of them to whatever suits you. I explained how to change and what to change exactly there. So Noel, let's see what you did here. Noel traded LB. Let's see what you did. Sell off with no volume, punched up through all the moving averages, pulled back to view up and held. You took the trade a little bit early. Not a bad entry right here. Look at the 15-minute chart. I like this in the 15-minute chart. What is this, guys, here? Actually, this is not visible. This week, what is this? You see it's trading in a range here. And then it's exactly low. And then it's just making a false breakdown. Like this is the range, right? If you just draw it or do whatever you do with it, this is the range we have right here. This is the low of the range here. And then it's breaking it. There it is, it's breaking it. This is what we see on the 15-minute chart, right? Or on the 5-minute chart. This is what we see. We see a breakout of the support area. Some people might go into the short side for the break of the pre-market low if this is the break of the pre-market low. But look how it's closing on the 1-minute chart. On the 1-minute chart, it's closing as a hammer. This is not a good low of the pre-market breakout setup we want to see, right? It's breaking the pre-market low, but it's immediately closing as a hammer, getting engulfed on the second candle, and this is actually good 2-minute open range breakout. If you miss the 2-minute open range breakout, you see it's dropping down, not even breaking the bodies, and not going to the wicks, coming back up, and you are taken to the long side. The entry was not early, the entry was perfect. And even if you got it here, this would have still been good. What would be our stop loss here? Somewhere below the wick, or at the half of the wick, or somewhere at the low if you want to be so safe, though I think this is not really necessary. Instead of having the low of the week, because this is a false breakout, right? This is a false breakout. You could just use the pre-market level right there for your stop loss. Taking it to the long side, early partials unfortunately, and now this is a late entry. This is what I would avoid. It's already did $1 move or 70 cents move. This is a huge move for $30 stock, right? And it's at the highs with no pullbacks. Before taking that, I would wait for a pullback. Then you are taking it for an ABCD pattern on the 1 minute chart right there. Oh, that was okay, that was a hotkey mistake, right? Okay, no problem then. Then this entry right here, let's see, stock started to hold under the pre-market high and went to get out hotkey error. Reverse my trade just before the stock researched back up, killed my profit, and then some as I trembled to correct the issue. This triggered Hulk mode and took some bad trades. Yeah, this actually something we all face, guys. If you are having a really good entry and really good trade and you are happy about it, you almost had a one and done, then a hotkey mistake causing you to lose half of those profits or all of the profits, you try to make it all back as soon as you can. It's not bad to try to make it back, but you can't just try to make it back as soon as you can. Market doesn't work this way. Market will give you opportunities, it will give you your setups, but you need to wait for them. It will not give you money whenever you want to have the money. It will give you money whenever it wants to do that, but you have to be patient for it. If you did a hotkey mistake or anything like that and you gave some of the profits back, just wait for the market to set up, to consolidate, to avoid the chop, and then get your entry right there. So let's see, this entry, as we said, like in this right here, I would have just avoided them. Yes, it's an ABCD pattern on the 1 minute chart, but it already was sort of extended right there. Now we're having a stock which is closing as a shooting star on the 5 minute chart. The shooting star at the high of the day is a reversal candle. No need to try to go to the long side against shooting star. Remember what we said on an ABCD pattern and reverse ABCD patterns? We don't want to take an ABCD pattern against the shooting star, and we don't want to go on a reverse ABCD pattern against a hammer at the low of the day. And look what happens. Being pushed down, being pushed back down when we are trying to take it to the long side, being pushed back down, right? This is so clear on the 5 minute chart that the stock is just being pushed back down every time. We don't need to force it to the long side only because we're having engulfings or some pattern we'll like on the 1 minute chart. The short play though was smart. I like the short play. Why is that? Double reversal candles on the 5 minute chart. It's being pushed back down a third time. You're taking it to the short side and there is the move. So this was amazing. Just make sure before getting your entry on the 1 minute chart to take a look at the 5 minute chart and see what it's doing. Once you see that there is some setup forming on the 5 minute chart and you like that setup, go back to the 1 minute chart and try to catch a good entry and try to determine where you want your stop loss to be. So good job on that long and that short. Yeah, exactly, Claire. Just copy and paste them in the hotkey configuration in DAS if you are using the simulator. If you use CMEG and you want the discounted commissions, you might want to change some stuff in the road to LAMP or something like that. I don't use CMEG, so I can't help you with that. But if you want to use the DAS demo, just copy paste them. Interactive Broker, same thing, just copy paste them. But yeah, good job overall, Noel. You're doing well. Andrea, let's see what you did. So Andrea traded AAL. Would have been really good to see the 5 minute chart. So guys, in the future, make sure to send the 5 minute chart as well, just to see the bigger picture. The 1 minute chart is good to get your entries on from, but we want the 5 minute chart to know where the stock is actually moving. Now let's say AAL. Looking at this or at the waves, it's there. Let me take a look at it. I'm sorry about that. Okay, I actually see that now. So let's take a look at AAL. Look at this. We're having this low right here on the 5 minute chart. Just let's go to the 5 minute chart for starters, okay? And this is where we actually want to include the wicks in our price action. Sometimes the break of the body is enough for us, right? But the break of the body is enough when you see that most of the time it's just holding the bodies. Yeah, I can maximize that. Sorry about that. Is it clear now? So yeah, when the low of the bodies is what's holding the price action, you could go for the break of the bodies to the short side, okay? If it's not the low of the bodies and you see that there are a lot of wicks which are holding the support, then you would want to go for the break of the wicks. This is on the 5-minute chart. Now looking at the 5-minute chart price action, it dropped down, came back up, right? Dropped down one more time, made a lower high, but got pushed back up, right? Now it's dropping down one more time, and here it's just holding a range. It's not descending. This is not a descending triangle here. It's just holding a range. This is what we call a channel, right? When you trade these type of price actions, which are holding a range, like a flat range like this, you want to go to the short side as close as possible to the resistance, and take your partials as close as possible to the support or for the break of the support. You don't want to go to the long side here, and you don't want to go to the short side here, unless you go for the break to the short side here or to the long side somewhere here for the breakout. Now this is looking only at the 5-minute chart. Okay, this is what we see on the 5-minute chart. Let's see if we can get an entry on the 1-minute chart. On the 1-minute chart, you see what we just said, right? It's not descending, it's trading in range, right? So if you want to take it to the short side, you want to get into the short side as close as possible to the resistance when it's being pushed back down, right? If you want to take it to the long side, you take it as close as possible to the support, somewhere right there. Looking at the 1-minute charts, there are no confirmation candles. At the highs, we're having the reverse hammers, right? At the lows, we're having the hammers. So at the lows, you see buying pressure. At the highs, you see selling pressure. So in this case, you definitely want to go to the short side as close as possible to the resistance and go to the long side as close as possible to the support, just to play this range right there. So you are taking it to the short side here and having a really tight stop loss. And I know why you had this tight stop loss. You wanted to get in for the breakout, right? You get into the short side maybe with this as your stop loss. You are happy that the breakout happened, and you see that it literally bounces off the level you have, and you exit maybe at break even, maybe at small loss, but I bet it wasn't even 1 R, right? Because you just exited once you saw that the entry was late and it didn't do whatever you wanted to do. So I like how you managed this trade. Try to get in for the breakout didn't happen. You know that the entry was late, you exited just for a really small loss right there. Yeah, so good job managing that. Now look at this. What do we have here, guys? If you look at the price action here, it was just holding a range, right? Now what is doing? A higher low. Now this is a good change for what it was doing right there. It did a breakout or tried to break out but failed. It's coming back up, trying to break down, but this time it's not even getting to the low of the range we had right there, the low of the bodies, right? And it's immediately getting back up. This was a good entry for the breakout again, but I would prefer to wait for the breakout. If we want to take it to the long side, we would want to get in as close as possible to the support to the long side, because it's still inside the range, or you get in after the breakout for the range, and since you are getting in for the breakout, your stop loss could be a new 1-minute low right there. Nivener, Thor will be in the classroom at 1 p.m. Eastern, after 30 minutes actually. Not in the classroom, in the chat room. You are welcome. Now let's see what else we had right there. So yeah, your winner was really good. Now let's see Nabil. Nabil traded a 5-minute open range breakout on LB. Now, it is a 5-minute open range breakout. Why is it a 5-minute open range breakout? Because it broke the high of the 5-minute candle, but it's not a perfect 5-minute open range breakout. If you took it here for maybe a 2 or 3 minute open range breakout, this would have been good. Why is that? First of all, it still made a move smaller than the average true range at this area. It is close to view up, which you like to see. It's making a bull flag pattern right here, and then it's breaking out. This would have been a really good entry for a 1 minute open range breakout. And the best thing here, you would be able to have a technical stop loss. This would be your entry at the breakout. This would be your stop loss. Now the move already happened. Now look at this. It broke the range right here. It broke the daily level. It broke the pre-market high, and you are taking it to the long side. This is just a little bit of a late entry. What would be your stop loss here? Like the only stop loss you could have, which is technical, half of the candle or view up. These are the best stop losses and the safest stop loss you could have. And having this as stop loss will just ruin your risk to reward. It gave you a decent risk to reward actually with this move, but it's just a little bit late. I would have avoided this open range breakout because it's just so extended right there. This was a huge move right here. We can't always hope for the same move to happen after this. So yeah, definitely if could quote an entry earlier right there. Now, is it 5 minute open range breakout? Yes, it is. It broke the 5 minute high, but it's not the best right there. The next thing is the exit. You could have exited a little bit earlier. I see you held on to your technical stop loss. You actually used half of the 1 minute candle, which is smart. You follow the rules, right? You know you entered half late, and you used half of the candle, which is a good stop loss for momentum plays or for breakouts when you are getting late. It didn't give you the risk to reward you wanted to get, and then you held on to your original stop loss. There is a reason, there are actually many reasons not to hold on to your original stop loss. And anyone? We actually discussed this on a previous trade we reviewed. Exactly, look at this. It's getting pushed back down, closing as shooting star at the high of the day. This alone is enough to get you stopped out at the next candle. If you want to just try your luck on it, and maybe it's going to go up and you see that it's actually trying to go up, but again getting pushed back down for the third time, I would just exit at break even or at small loss. No reason to hold on to the original stop loss after this price action on the 5 minute chart there. Yeah, exactly. Those weeks, they were just so risky to hold against, right? So yeah, despite your late entry, your stop loss was amazing, and I like that about what you did. And stay inside the chart. Aaron, let me see. So sometimes it's easy to fix, sometimes this doesn't help some people, but let's see. Right click on the chart, go to study config, config X, and I have these settings here. Some of them say this should not be included. For me it's included. Just try this, and if this fixes it, it's good. If not, you might want to chat to dash support or check the forums. Now this was, yeah, it would work at the high of the wicks as well, because TradeIdeal scanner, when it calls the open range breakout setups or open range breakdown, it includes the wicks. For us here, most of us and Andrew as well, we don't include the wicks on open range breakouts. Now let's see this trade. For rows, ABCD pattern, SQ pushed up on high volume. This is it right here. And it's sold off on low volume. This is the pullback, guys, and you see it's being sold off on low volume. I like how you're analyzing this. After a couple of minutes, it made a new low on perhaps retesting. So that's it here. Look at this. Rose didn't take it to the long side after the hammer. Why is that? Because you don't know, is it going to drop right here, or maybe just going to make an ABCD pattern to the long side. Maybe it's going to do a double top and then get sold off. So what happened here is that it came back down, but it retested that support right here. Because of that retest, and it coming back up, Rose took it to the long side here and started partialing all the way up. There was an ad here, and guys, why was that ad right there? I think the ad was because the previous resistance acted as a support. You actually used this resistance right here. Yeah, and then you took it to the long side, but I wouldn't have done this, or I wouldn't have used this ad right here. Why is that? Look at SQ. 1, 2, 3, 4, 5, 6 candles. 6 candles, we're having a parabolic reversal, right? Let me zoom it in on the 1 minute chart. SQ is starting to form a parabolic reversal. It has double reversal candles at the high of the day. So I would have used this as an indicator to exit most of my position. I would have held a little bit because the entry was good. We're going with the trend, and we know that parabolic reversals, they are not necessarily pullbacks to V or reversals to view up and below it. They are just a pullback to some sort of support area and then a continuation above that, right? But a parabolic reversal signal, even if you don't trade a parabolic reversal, you could just take it as an indicator for your partials. You see 6 continuous 5-minute candles on the 5-minute chart. You see how it's getting extended there. This is the one, this is the 5-minute chart. You see how it's getting extended there with no pullbacks, far from view up, far from the 9, and we know it could make a pullback at least closer to the 9 moving average in the 5-minute chart, right? Once I see that signal happening right here, and that's what happened, the signal happened at the high, that would be a signal for me to exit most of my position out, and I'll hold 20%, 30%, I'll hold, and if I make sure that it's actually holding, this would be a place for me to add. And I like this. I would have done exactly the same thing. Unfortunately, what happened is a fake breakout. My Epic Pen just freezed. Let me close it and open it again. So, unfortunately, this was a fake breakout right there. Sorry about that. Oh my god, what am I doing? Yeah, you see, this was a fake breakout. You're adding to your position right here, and I would have done the same thing. I would have added right there. And what happens? Fake breakout, and it just dropping back down, which would have been a signal to exit. So yeah, the first entry was good. It would have been way better right here after it's breaking the pennant right there. This add I wouldn't have done because I'm not sure. Maybe it will make a double bottom with the second bottom lower than the first one, and then goes to the 9 moving average in the 5-minute chart. Once it fails doing that and starts coming back up, this would be a good signal for me to try it to the long side or add to my position, at which I'm going to get stopped out. So Sebastian, let's see what you did. You're welcome, Rose. So Sebastian traded NVDA, and let's see NVDA, guys. NVDA, you see, why wouldn't we have taken this thing to the long side, guys? This is the 5-minute chart here, right? Let me get this color to yellow. So you take it for a break of the high of the day. Now look at this, 1, 2, right? This is actually not continuous because it did sort of a pullback, but you see here, this area right here just showed you a fake breakout, right? Then you're having a reversal candle at the high of the day, right? This is a reversal candle at the high of the day. It's making a pullback, coming back up. Yes, this is an ascending triangle. Yes, it is an ABCD pattern, but we don't want to chase a stock. When we see a stock making an ABCD pattern, this is one of the rules which I mentioned actually. Yeah, exactly, it's intraday. On my ABCD webinar, if you watched it, I don't like taking ABCD patterns or trend continuation moves when the stock is so far from the 9 moving average in the 5-minute chart. Why is that? There are two reasons. First of all, stocks don't love being so far from moving averages, and they eventually just come back to them and pull back to them. So I would prefer to see that pullback. Then if I make sure that it's actually coming back up, I'm taking it to the long side. The next thing is, most of the time breaks occur, they do happen, but because the stock is so extended, those breakouts are not really strong. They don't move a lot. Sometimes it could just make a few pennies breakout and then drop back down. Sometimes they could make a fake breakout, go a little bit in your favor, then get pushed back down, closing as short or as a reverse hammer, and then get sold off. And sometimes they just don't break out and they come back down. So you see here, you take it into the long side for the break of the high of the day, but it was already extended. This was actually a good, exactly, Byron, this was actually a good parabolic reversal. Why is that? Stock is so far from the 9 moving average in the 5-minute chart. You're having multiple reversal candles. You're having a fake breakout, which is one of the good criteria for a parabolic reversal, right? This fake breakout is closing as a shooting star or as a reverse hammer. It's making a new 1 minute low, getting back into the range, taking it to the short side here, putting your stop loss half of the wick, and then just drive the move to the downside. Then you are trying to take it to the long side one more time, and this time it's decent, but still not decent at the same time. It's decent because you were patient and you waited for it to go to the non-moving average in the 5 minute chart. It touched the 9 here. It was the touch of the non-moving average in the 5 minute chart. It came back up, did a new 1 minute high. You're taking it to the long side, but it's dropping back down. Now this here is a parabolic pullback. It's the ABCD pattern type C. When the stock is going up and it's forcing itself to go to the 9 moving average in the 5 minute chart. When the stock is dropping and forcing itself to go back down to the 9 moving average in the 5 minute chart, we can't expect it to go all the way back up, because what it could do is form a reverse ABCD pattern and drop down. It could do that on the 5 minute chart, or it could just pull back to the moving average cross. And guys, if you don't pay attention to this, start looking at this, especially on the 1 minute chart or to the 5 minute chart. After the stock moving averages cross, stocks usually make a pullback all the way to the cross. After the cross, they start dropping down. Just something to pay attention to. Not to trade this, but it's useful and it will save you a lot of fake outs, especially after hammer somewhere right here. You're taking it to the long side for the cross, and then it's getting you so that. It just will help you avoid some bad setups right there. In this case, what you want to see it going up, dropping down. You want to see that this reverse ABCD pattern has failed, and it's coming back up, and here you could take it to the long side. Bollinger Bands, they're just showing you the range at the high and the lows when the stock is just extreme, and when it's just trying to go down. It's sort of strategy. If it goes outside of the range of the Bollinger Bands, you could expect it to go to the low of the Bollinger Bands, and if it's going below the range of the Bollinger Bands, it could go back up. I don't use them. I'm not an expert on them, so I will not give a lot of advices on them. And yeah, it's just an extra indicator. You could use it, you could not use it. But a lot of indicators just get me confused. I'm not saying that they are bad. If you are using them and you're good with them, just continue using them. It's just that I didn't use them and I don't want to get myself confused. Okay, I see that JC. Let me take a look at it. Interesting whether you would have exited when I did, or you would have held on for the retest of the high of the day, feeling annoyed that it hit my 10R without me. Okay, let's see. So JC traded AVTR to the long side. Decent. Why is that? It's going up, right? There was a reversal candle at the high. It made a pullback. And remember what we said, sometimes it's going to the 9 moving average in the 5 minute chart, sometimes it's going below it, sometimes it's closer to it. In this case, you see it actually broke the 9 on the 5 minute chart, and I like this candle. This candle is amazing. You see that it, after it broke, right, after it broke the low of the day, not only the 9 moving average in the 5 minute chart, it got pushed back up. Now this is not a good entry right here. You don't want to just rush the entry. You want to wait for a W shape. This is it. It's making a higher low wave. Later on the day, you want to see the W shape on the 5 minute chart. Earlier on the day, it's decent if you see it on the 1 minute chart. I would have waited for the break of this area right here, just to be safe. You still entered earlier, still not bad. Taking a partial at the high of the day or at the break of the high of the day. Another partial here and another partial here. So yeah, this is decent. I wouldn't say that this is a parabolic reversal. If this happened here on a third consecutive candle when the stock is so far from the 9 moving average in the 5 minute chart, and then gave you this reversal candle here, I would have exited 70 or 80 or maybe all of my position out. But if looking at the 5 minute chart, it's not parabolic, right? It's just slowly trending closer to the 9 moving average in the 5 minute chart. So yeah, I wouldn't have exited all right there. Along with that, you had many fake new 1 minute lows, right? This is not parabolic. It's just uptrending in a choppy way, where you could just hold on to the price and hope that it's going to go higher if it wants to go higher. Yeah, it's a spinning top, but remember guys, candles are only candles if they are not on their right places. If you see a spinning top here, it's not spinning top, but I mean a doji somewhere here. If you see a reverse hammer somewhere here, if you see a hammer somewhere down here, these are candles which are not worth looking for, right? Like this hammer right here, would this be an indicator for you to take it to the long side? I mean, not really, right? This hammer right here, this doji, this hammer, this reverse hammer, this hammer, this reverse hammer, this doji. When those candles are occurring in a range or closer to it, right? You shouldn't pay attention to them. When they are happening in a decent move at the high of the days, at the low of the days, maybe on ascending triangles closer to breakout areas, these are the confirmations we want to look for, right? Other than that, just ignore them and continue reading the price action, the volume, and look at the general trend. So Mr. Spock, let's see what you did there. Don't let fear and greed be your enemy. Oh, that's sad actually. Did it hit your stop loss? Or you just exited? Looking at this, I'm not sure. I might have been subbed out as well, yeah. I think I would have been subbed out. Yeah. It depends. I mean, like, looking at these guys, first of all, if this is extended, do we have the 5-minute chart here? No, we don't. If you had the 5-minute chart and if it was extended, my entry would have been on this candle and my stop loss would have been the high of this candle, right? Or the high of this candle. If this, and yeah, I would have been subbed out actually as well, right here, if I had taken this one. So there is nothing bad you did about this. I just want to confirm if this was extended or no. Just looking at these candles, this would be, just let's assume this is 1040, right? This right here would be one 5-minute candle, somewhere around that. This would be second 5-minute candle. So yeah, it's only two 5-minute candles. It's not three. And looking at this size, it's average size. Like each candle is almost $1 on Apple. It's normal. I would have waited for the third candle. I'm not sure I would have taken this one right here for a reversal. Right here, I see that the move here was crazy. If we were having a reversal candle somewhere right there, I'd have been interested. But still, this is decent. Like having the reversal candles, 4 or 3 candles, and then you're taking it to the short side and go for the move. It's not bad. But I think I would have been subbed out as well right there. So yeah, that's it guys. Do you have any questions? Oh, Scott actually sent a trade. Let's take a look at Scott's trade since we have time. Scott traded Rocket. I actually traded Rocket as well. You took it for a 5-minute opinion range breakout. Some partials there. Then you took it to the short side. I'm not sure what the 1-minute chart had, but if you had a reversal candle on the 1-minute chart, that would have been decent. Not sure if that's true. I think that's another long partial, and stop out at break even. Now this long I would have avoided. This is just so early, right? After a parabolic pullback. Like somewhere here, it would have been more decent. I think I've traded Rocket. I'll show you my trades on Rocket as well. It's good how much you held on to it. Another good entry, not bad, and I see that you had a good stop loss on it, which is why you held. But this was early partial. Like this was exactly at the ascending area breakout. I would have definitely held on to this one. I'll show you my trade on Rocket like in a second. Let me see lose trade. I think I missed lose trade. Did you send it to the off topic chat? Oh, you did, but I missed it. I'm sorry about that. So let's take a look at this one and then I'll show you my trade on Rocket because we still have time. It might be helpful. So yeah, VIPs, drop down. This is the 1-minute chart. This is the 5-minute chart. Red candle here, get engulfed on the second candle. Sort of a high breakout, fake breakout. It's still on a downtrend on the bigger picture, right? And it's also had a fake breakdown right here. So looking at this, it's downtrending from the lows, right? Change the trend here and then it's getting pushed back down. What did you take it to the long or to the short there, Lou? I would have avoided the long definitely. Just looking at the general picture, you took it to the long side. So why would I have avoided the long? Just look at the chart, at the 5-minute chart. One reason. I know you know it. Yeah, you definitely know that. There is a reason on the 5-minute chart why we wouldn't take this thing to the long side. It's one of my rules. I'm not sure if you're implementing it, but trend is your friend, Byron. Yes. Yellow, I see why you have taken it on the 1-minute chart, but there is one reason which we could have avoided it. It's downtrending. Yeah, that's it. That could be a reason as well. Lower highs, another reason. It's a moving average, just to make it simpler. Remember the two rules: don't get with the trend when the stock is so far from it, and don't go against it when the stock is so close to it. The 9 moving average on the 5-minute chart, right guys? So all your answers, they were right. Like, it was downtrending, it basically evolved around this or around what I wanted to tell you here. So you were right. But to be more specific, I don't love to go into the short side when the stock is so far from the 9 moving average in the 5-minute chart. When the stock is so far from the 9 moving average in the 5-minute chart, I actually start looking at it for a reversal with the target the 9 and the 5, and I don't love going on a stock to the long side against the 9 moving average in the 5-minute chart, especially if it's downtrending, right? Because the stocks which are trending usually pulling back to the 9 and then continuing the trend right there. I see why Lou took it to the long side. There was an increasing volume down here. It got engulfed, it squeezed above view up, then it came back down. You assume that it will bounce out of view up and continue the trend to the upside. In this case, I would have waited for one thing. I would have waited for it to break the 9 on the 5-minute chart and close above it on the 5-minute chart. If you have this candle green as well, and then on the next one it's breaking out, it will be more decent because it will be the break of the resistance which it held with some extra confirmation. When I see this here and I see this candle just opened out, the first thing in my mind is the stock could actually make a bullish engulfing sandwich setup. It's downtrending. Yes, it did an engulfing. This candle just opened. It still didn't close, right? So I'm not sure how this candle is going to close. It could just go all the way down, close here, form a bullish engulfing sandwich, and then it will be a good setup to the short side. Why will I be more interested in taking this thing to the short side and not to the long side? I'll be more interested in taking this thing to the short side because it's downtrending, right? Once the trend has been broken, then I'll be interested in taking it to the long side, and I will wait for confirmations to take it to the long side. Looking at the 1-minute chart, we're having a reversal candle here. At the high of the pullback, it's starting to make lower lows and lower highs. If you force it to take to the short side here, it will not be the best yet, but it will be decent. Right here, once it's breaking finally the support area, this is where we would like it. Put our stop loss somewhere right there, and then just go with the trend. Not a bad trade. I see what you wanted to do there. But yeah, could also have been a little bit better right there. Still, good job. Let me show you my trade on Rocket today. It was not a parabolic reversal. This was an ABCD pattern setup. And tell me guys, why did I take it to the long side here? Let's get back. What did I like about it on the 5-minute chart? It's holding view up, exactly. This is one indicator, I like it. First of all, if you're looking at the daily, it's uptrending, right? This is one thing I definitely liked. Stock is uptrending, it gapped up, it's strong. In the pre-market, it's holding above view up, holding above the moving averages. Another indicator that it's holding to the long side. Lenny is seeing an ABCD pattern with a W shape. That's it. That's another reason which I liked right there. More reasons. Low volume in the pullback in comparison to the increasing volume in the upside. Decent. Now, let's go to the candles. what do we like? Now we are having the uptrending, right? We're having a stock which is holding above view up and above the moving averages. We're having the W shape. Now we want the confirmation candles, right? We want to see something confirming our movement. What do you see on the 5-minute chart? What was that setup called? Bearish engulfing sandwich, right? This is the candle, the bearish candle. It's being engulfed from two sides by green candles. So this is a good confirmation for me to take it to the long side, right? I'm taking it to the long side and I'm holding, right? What's my stop loss in this case? I entered in a range, guys, right?